Let's look beyond the noise. Let's look beyond the daily news, the ups and downs of the market. Sometimes everybody's happy, sometimes everybody's depressed. What is actually happening when we zoom out and when we look at the long term? Here is what's happening. This is the percentage supply on exchanges. This orange area over here, which peaked directly after the Corona crash. So that is when Bitcoin was at only 10,000 in 2020. Since then, the percent of all the Bitcoin that's actively being traded is shrinking. The Bitcoin price went 3x since then, temporarily even 7x, but the supply on exchanges is going down. Now there's two ways to interpret this. The first one is, well, adoption is declining. Bitcoin isn't used that much on exchanges anymore. So maybe this was the last high for Bitcoin. Maybe there won't be new all-time highs anymore. That's one interpretation. The second interpretation is that the nature of how Bitcoin is being used has changed. So before 2020, it was mainly used for speculation, for riding those waves. Nowadays, it could rather be used for long-term investing. So people simply just wait out the volatility. They wait out those drops of 70, 80%. Now, there is a way to identify what interpretation is correct. And that's by looking at the long-term holder graphs. Since now more and more Bitcoin moved on-chain, so they moved away from those centralized entities, but they moved on-chain to people that hold individual wallets, we can now analyze what's happening with those Bitcoins. And so let's do exactly that. What we see over here in purple, that's the percent of Bitcoin again that have not moved in the last 10 years. So there are Bitcoin that haven't moved for 10 years. Those Bitcoin are likely being lost, right? If you are a long-term investor, you might still sometimes move your Bitcoin from one wallet to the next. Check if everything still works. Check if your hardware wallet works. Maybe move to a more secure hardware wallet. But if you didn't touch your Bitcoin for the last 10 years, then at least in aggregate for that cohort, most of those Bitcoins have lost, and I expect this line to never ever decline. I expect this to always increase. More and more Bitcoin will be part of the 10-year plus holder group of the people that simply just lost it. Those coins in aggregate will not get revived again. Let's look at the Bitcoin that hasn't moved for at least 7 years. That's now this curve over here. So this adds both up over 10 years and over 7 years. And again, it's ever increasing. And it's currently at 20% of all of Bitcoin. Let's add one more. Bitcoin that hasn't moved for at least 5 years. And here we do see a few blips. So some people really hold for 5 years and then sell it off. But again, in aggregate, right? It's very few of those blips. Not everybody that hasn't moved for 5 years has lost the keys, but in aggregate, more and more people hold for 5 years. Now, those are mainly involuntary holders. They've lost their Bitcoin. They won't access it anymore. But the thesis that we actually wanted to check for at the beginning of this video, the idea was that more Bitcoin is now being held long-term and is not being speculated with. So we actually have to look at shorter durations. Other people that historically traded maybe every 1 or 2 weeks, do they now tend to hold maybe for 1 or 2 years? And so let's look at those holder graphs. We add now all the Bitcoin that hasn't moved for at least 3 years. And this is the very first of those charts where we actually see a decline. And when does this decline? It declines when Bitcoin hits massive new all-time highs. Well, the first time we saw a decline here was when Bitcoin moved up to 20K. And then came the crash in 2018 where Bitcoin went down to 3.5K. But most of the selling happened during the run. So when there's a lot of excitement, when new people enter the space, then the long-term holders sell to those new people. Then the new people hold for the elevated prices, expect for further increases, which don't happen. And then those people panic, they sell, and this is then generating this massive 80% drop. What we notice here is that the people that held for at least 3 years, the percent of Bitcoin that is held for that duration, it's at an all-time high again, 40%. So in other words, this is the point in time where the Bitcoin supply, the tradable Bitcoin supply, is the tightest. The long-term holders simply just continue to hold. And the less supply there is on the exchanges, the less supply there is moving from those wallets away to maybe decentralized exchanges or to Bitcoin bridges, the more additional buying in through dollar cost averaging, for example, can push the price up. So the price is more sensitive the less liquidity there is. And the more people long-term hold, the more they take away liquidity from all the places where you could potentially buy. And so this is very, very healthy, right? Look at this. This was very high just before we had a massive bull run afterwards in Bitcoin. And again, it's very, very high. What we also notice here is that the selling in the last bull run, it wasn't really that much, right? So these 3-year maximum holders sold quite massively in the run up to 20K. They didn't sell that much. It almost just flatlined with the run to 60 and then 69K. So even though Bitcoin goes down by 70%, that's the crash over here, the long-term holders don't bat an eye. They are not selling. And now let's get into the more volatile holdings, people that hold Bitcoin for at least 2 years. Again, this is shooting up. People are waiting for a new all-time high before selling. Even more pronounced of a move when we include the ones that hold Bitcoin for at least 1 year. So that's roughly 70%. In other words, only 30% of Bitcoin have moved in the last 12 months. And whenever this happens, right, whenever this line was high, we had a very nice, massive bull run afterwards. I can't predict the future either. I simply just look at this from a fundamental perspective. If the supply isn't expanding and if everybody is just holding, then the likelihood of the whole thing becoming a self-fulfilling prophecy, everybody expects the price to rise, the likelihood of that happening actually goes up. Everybody thinks the price should rise, so it will. If everybody thinks that the price is heated, then people are selling and then the price really does decline. Right now, we are very far away from a heated price. We have never seen that much long-term holding. And so that situation, paired with the liquid supply on centralized exchanges going down, and with traditional finance potentially entering the space, right? The BlackRock ETF, the Fidelity ETF, the Vanguard ETF, all of this looks very bullish over the next years. Bitcoin is very unlikely to get outlawed. And so if you can stomach the volatility, it's probably one of the best savings vehicles there is. It does still make sense to allocate across different asset classes, cancel out some of that volatility, but not being invested in Bitcoin at all might be more risky than having a small allocation to it. Feel free to join us on Telegram. Simply search for Bitcoin Strategy Channel within the Telegram app or click the link down below. I'm there regularly, looking forward to chatting with you. Bye bye.